Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday the 7th of May. It is Non-farm Payrolls Friday. So what is this payrolls report going to be doing for the dollar? Well, in front of the report, the dollar's fairly quiet this morning, but yesterday had big selling pressure coming back into the market again. That impacted through euro dollar pushing higher, through gold pushing higher. And I think that this payrolls report, markets are expecting there to be a pretty strong number, maybe even above 1 million jobs, although the consensus is at 980, 990,000. The question would be how big this payrolls report could be to try and get some sort of traction, run higher in these bond yields again. Now, I think you'd be looking at probably 1.3 to 1.4 million jobs to really get those yields moving higher. And I don't think we're necessarily going to get that big a report. So I think at the moment, the dollar is likely to remain under pressure. So how does this impact through euro dollar and gold are the two charts that we're looking out for today. And also cable after that Bank of England monetary policy decision yesterday. Now, in terms of other data we've got today, nothing really on the docket. So we're looking out for just maybe a speech by President Lagarde of the ECB impacting this morning. Don't forget the INFINOX support and resistance table at the end of the video for your trading levels as well. Now, looking at the charts, as I said, euro dollar pushing higher is going to be an important factor. Can that payrolls report continue to move that euro dollar higher? And also the run higher on gold as well that we're looking out for. And that cable report on the Bank of England yesterday looks to be a positive move for sterling, but not really too much traction. So let's have a look at these charts. So onto this INFINOX MT5 platform now, and we can see that the run high that we had through April on euro dollar pulled back in a bit of a correction, but the line of support on the breakout of 120 big figure area really did hold nicely this week, and the market rallied strongly yesterday. And we zoom in one more level here, you can see that that line of support comes in now. That could become a neckline support of a top pattern, a potential head and shoulders top, but my feeling is I'm not looking at that at the moment. You'd see that potentially developing if the RSI went back under 50, but my feeling is that with yesterday's run higher, I think that suggests that the dollar is weakening once more. I think that there is more likelihood there of euro dollar pushing back higher to test the 121.50 area of resistance. So you're looking on the 4-hour chart. You can see 4-hour RSI back above 50. That again helps to improve that momentum. Needs to break back above initially the 120.75 area of resistance, and that would be the level I'd be looking at on the payrolls report today. But my feeling is certainly I think that euro dollar, although it is still effectively ranging at the moment, I think the expectation is that I'm looking at a positive bias back towards the highs again. But that support of 120 big figure area is important. And onto cable. Again, you could argue certainly the ranging situation is still in play on cable, but looking at one more level, you can see the big uptrend is intact and the market pulled higher initially yesterday on the back of the Bank of England. Bank of England tapering asset purchases should be sterling supportive, and if the dollar weakens as well, that would be suggesting that I think that cable is coming back towards a test of the 140 area in due course. You can see a positive bias through the momentum on the RSI, just a slight positive bias, trading above moving averages. But I think ultimately cable is still likely to be testing higher. Bit of volatility in the 4-hour chart, but into this testing of the resistance band that comes in around 139.20 up towards 139.75 area. But I think that there is an upside bias still on cable. And finally on this gold chart, finally a bit of traction. We had the breakout. The base pattern above 1755 implies 1845 area, and I've had this this area of target in here for a while, and it's now pulling into this target area. It's finally breaking up using that basis of support 1765, moved above 1800 bucks impressively yesterday, and has continued today. But one more level out, you can see this is still actually a bear rally from the big correction to the downside, but it's still looking positive on the near-term basis for the recovery to continue up towards 1845, and then you start to look at the 1855 area of resistance. But certainly momentum is positive. That RSI confirms the breakout. That's encouraging. And you look on the 4-hour chart, again, positive momentum, strong momentum, looking to buy into the weakness. any weakness that you get, I think, on gold back towards the $1,800 area is a buying opportunity. 1810 is a support area, so you've got 1800 towards 1810. Good basis of support now, I think, to really push into the 1840s and then push towards that 18.5 area and continue that recovery. So thanks for watching this video. I hope you found it informative for your trading. Join me again on Monday, where we'll be looking at how the dust is settling on that payrolls report and also looking ahead to the new trading week. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you again next week. Thank you very much.